I'll bring you an extra chair. Don't worry. I'll bring you an extra chair. Don't worry about it.
I see her, yes.
Can I give this to you? Just hold on.
Good afternoon, everyone. Hello, and welcome to Davos, ladies and gentlemen. What a pleasure to have you all with us here today at the Euronews Hub. For those of you watching at home, welcome too. I hope you enjoy what we're about to get down to business and discuss. So, I'm Jane Witherspoon. I'm the managing editor for Euronews in the Middle East, Central Asia and South Caucasus, and I will be your moderator for today. And we have a fantastic conversation with CDP and an outstanding panel of business and economic leaders joining us. We're in a moment of profound complexity. Companies are navigating geopolitical uncertainty, shifting trade dynamics, persistent inflationary pressures, and accelerating climate nature risks all at once. Against this backdrop, a key question for corporate leaders in 2026 is no longer whether sustainability matters, but how sustainability performance translates into resilience, competitiveness, and profitability. Today's session draws on the CDP Corporate Health Check 2026, which offers a clear-eyed assessment of where companies are making progress and where the gaps remain across climate, nature, and governance. So it is my great pleasure, without further ado, to give a big warm welcome to the CEO of CDP. So she's looking at me in the wings there. Sherry Madeira, please welcome to the stage.
I'm glad to see even a professional gets tripped up by the acronyms, right?
I saw you looking at me as well out of the corner of my eye, and I thought, oh, what's she waiting for? Anyway, Sherry, I see you've got your winter boots on. You're all set. How's Davos been for you so far?
Well, vanity has obviously gone out the window for practicality, but fingers crossed there has been no slippery ice. I think some of the conversations have been a little bit slippery over the course of the week. I know that this is not a politics session, but I'm here as the CEO of CDP, and we believe in sustainability being good for economics and good for the planet. Any slips has been an interesting week.
What's been the highlight so far? Today, obviously.
Right now with you, Jane. No question at all. But I also think that there was a great moment that was set up as a debate. Okay. And the debate was, is AI going to outpace humans? And how is it that AI can actually overachieve and be more successful than humans, for or against? And of course, we all have our preconceptions. I'm sure everyone in the audience and everyone listening thinks, I know which way I would vote. But the debate was something that starts thinking, maybe I should think again. So that is exactly what Davos is about, and I loved it.
Fantastic. Well, the floor is yours. You have a presentation for us, so over to you.
Well, I hope everybody will breathe a sigh of relief that this is not death by PowerPoint. We are going to have one slide, and I'm going to talk to you about sort of the real business implications of what it is that CDP has unearthed, thinking about some of the insights as well. So we're really proud to be working with Oliver Wyman, second year running. It is the CDP Corporate Health Check. And year-on-year progress, there are some pluses and there are some minuses. I look at this and I think there are actually three key things that come away for me. The first is that leadership is trending up. 15% of the companies that were a part of the survey, and we have over 20,000 companies that report to CDP, but 10,000 were in this cohort that we worked on with the data. So it's a substantial market segmentation. And what we're seeing is this year, 15% were in that leadership tier. And again, our methodology I won't go into here, but please do dig into it. And that's something that we've worked hand in hand with economists and with Oliver Wyman and the market. So what? Well, in comparison to last year, that's 63% up year on year, which says that companies are really starting to think about sustainability leadership as part of their business. And that's what we're hearing anecdotally, and that's what we're hearing in some of the numbers. And does that mean that they're no longer looking at emissions? No, they are. Those leadership quartile are having a compound annual growth rate decrease of 4% in their emissions, and that compares to the other categories of only 1% decrease in emissions. So generally going in the right direction, and those leaders are accelerating that. But what does that do to their valuation? How does that actually start thinking, well, as a company, I'm here to do business, to do good business, but profitable business? And what we're finding is that out of 7 out of 13 industrial categories, their valuations and their market capitalization were stable or went up. Now, what this says is that those that are actually making sure that they're prioritizing missions, looking at the risks and understanding the opportunities, are not being penalized in doing that. And actually, depending on the industry, we can start thinking about what other levers are there that are influenced. Is it policy? Is it other factors? Is it trade? There's another one to make sure we don't slip on the ice. But also, one of the things that we're really seeing about leadership trending up is that leader group has identified $218 billion worth of unique opportunities for their business because they have been looking at this sort of data in climate, in nature, and in transition plans. So that's pretty exciting. So the first one, leadership is trending up. The second point is that geography matters. And what we've revealed is that the country that is highest ranked in terms of number of leaders is Japan. So they're at 22%. It's closely followed by the EU, hurrah, and the UK, where I call home. Interestingly, the US is lagging behind. And how is it that we know that out of the numbers? So the top 2 leadership quartiles is, in China, 50% are in those top 2. If we look at Europe, again, they're in that top 2, 50%. only 31% of American companies are reaching those top 2 levels of leadership. So there's definitely a data-driven correlation to some of that. And the third point, so we've got leadership is trending up, second is geography matters, and the third is adaptation is on the corporate agenda. And how do we know this? So CDP has unearthed last year that companies are identifying risks very specifically. They're not just talking about the risks, they're putting a number value, a dollar value against each of those risks. And cumulatively, that's $1.5 trillion worth of risks that is quantified as financial risks coming specifically from physical risks. And you might say, oh, well, that's a pretty big number, but what's anyone going to do about it? Unfortunately, the corporates aren't doing anything about it yet. So here's one of those gaps that you referred to. So only $84.5 billion has been allocated by those same corporates who have identified the $1.5 trillion in actually putting capital to work in order to mitigate that. I think that there's some work to be done, and perhaps the capital markets can think about how to mitigate some of that risk that's already so well defined and financially bounded. So I think that from that point of view, we've got 3 key things that are working to the advantage of the corporate health check. One of the things that we don't know about is how is it that when we look at different geographies that don't have as much data density, or how is it that we're looking at different industries, how is it that some of those actions are going to make the most difference? And that's, Jane, why I'm super excited about inviting our panel up here across industry to help us find out more, but also make sure that we are embedding the real concept of what the corporate health check is about, which is what you can measure, you can manage. Thanks.
Sherry, I feel like you should be coming to work for Euronews. You're a great little tag team here presenting. Thank you so much.
Couldn't do it without you, Jane.
Hey. Well, thank you so much. And as you mentioned there, we have a fantastic group of panelists. I'm going to stand up because I'm in somebody's seat here so we can make way for them. Please, if you could pick up the pen. If you could please put your hands together as we welcome our first guest, Ezgi Barcenas, Chief Corporate Responsibility Officer for L'Oreal. Next up, we have Gilles Moek, Chief Economist at AXA. Vaishali Nigam Sinha, Co-founder and Chairperson Sustainability at Renew. Welcome. And last but not least, a big clap is needed because it's his birthday today. A big birthday. Sorry, Gilles. Gilles Rocol, Global Head of Industries for Oliver Wyman. Happy birthday, Gilles. Thank you all. Sherry, I will start with you because I have a question that leads on from the presentation you just gave us. The CDP Corporate Health Check 2026 draws on disclosures from thousands of companies globally. What is the single most important signal C-suite leaders should take from this year's findings?
Thank you, Jane. I think it is that if you continue to manage what you know about your business, you are going to not only be able to actually fill in box ticking, you have some corporate requirements from a compliance perspective. We're all beyond that, folks. Corporate leaders are actually using this data to be able to identify how their business is going to be affected by what comes next year, the year after, and the years that come after that. It is really short term now in terms of thinking about not only physical risk, but where some of these trends are. And what we're seeing is that nature and climate are inseparable. So we know 2 things that are going on there. You have to actually measure and manage, and you have to think about this holistically. You can no longer have a climate and nature discussion. It has to be together. That's what we're calling Earth positive.
Thank you. Vaishali, I'll bring you in now if you don't mind. But from your perspective at Renew, how do you think C-suite leaders should interpret sustainability today? Not just as a cost center, but as a strategic response to economic trade, as well as energy security concerns.
Sure. It's great to be here, and it's a lovely setting here, just like warm was, quite warm here, so thank you for that. So at Renew, we've never really looked at ESG as a cost center. We've looked at it as a strategic imperative for our business. And I think that's the first step when you look at it from a company lens. I think it's really important for us to ensure that the entire organization is engaged and is just not an ESG checklist of things to be done and reported for scores. And while that sounds very commonsensical, it's not very common in the industry. So that's number one. Secondly, in the current geopolitical environment where, we have our supply chains around the world, it's really important to look at how trade and energy security is impacting your business. And so the CEO really needs to have a broader perspective, which guides the CEO to look at the specific requirements. And then I think when the board, senior management get engaged, and from the bottoms up, we are a renewable energy company and we have 150 plus sites across the country. So it's really important for us to connect that tonality with what's happening on the ground and get people on the ground engaged as well. Of course, having ambition is important, but getting the basic stuff done on the ground inclusively is what has worked for us.
Thank you. Gilles, from Oliver Wyman's cross-sector of work, what are the most common execution failures that prevent companies from turning sustainability ambition into business outcomes?
Thank you. And as you say, Oliver Wyman works across all sectors of the economy, and our global climate and sustainability platform is really cutting across. So we can sort of derive some learnings from the work we do in all these sectors. So I think the key success factors are, number one, a clear ambition. And this ambition needs to be embedded in the core strategy of the company and not on the sideline. Number two is the clarity of targets. The target needs to be very clear, but achievable, as well as ambitious. They need to be translated into clear plans, action plans, investment plans, and resourcing. And sometimes that's where things disconnect. You need to secure senior leadership sponsorship and accountability, in general secured by an incentive plan that is connected with sustainability targets. And finally, you need to engage with stakeholders across the value chain, suppliers, customers, and partners.
Thank you. Over to the other Gilles. How do you deploy responsibly, I guess, your responsibility investment opportunities?
Yeah, maybe one word before to echo what Sherry was saying, because obviously there's a context to our conversation, and yes, Davos has been quite interesting, so to speak. Just as a reminder, we've had lots of conversations about the need for Europe to be more assertive, to be stronger, to gain in autonomy. And we should remember that decarbonation, for instance, is one aspect of making Europe stronger. It is definitely in our economic, geopolitical interest to go further into decarbonation, and we have assets to do that. Just wanted to start with this very simple statement. Now, as to what we do. First of all, we engaged in sustainable investment well before reporting became the issue of the day. So we're very far away from a box-ticking exercise. And I think that for us, it probably starts with having a very clear, visible target which mobilizes the entirety of the company, and which we make very, very transparent. And failing, obviously, on this target has some very direct consequences for people in the company. And we've been actually more than successful on this. We had this idea of this target of reducing the carbon intensity of our portfolio by 50% between 2019 and 2030. And actually, we got there in 2024. So we were quite happy with this capacity. But it's an endless task. And the question obviously is whether this was helped at the beginning by the fact that there were very low-hanging fruits which were easy to grasp. And actually no, because we started from a fairly already decarbonized portfolio. But I really think that setting a very, very clear ambition for the entire company, something which is clear, something which everyone can easily understand, is absolutely key. If you lose yourself in a variety of sub-targets, sub-objectives, even if obviously you need to make things more granular in the entities, you may lose a little bit this momentum.
Thank you. Ezgi, hello.
Hi.
Waiting patiently there. Thank you so much. What does effective governance look like at L'Oréal when it comes to sustainability decisions and how they're affecting R&D, sourcing, marketing, as well as brand strategy, all simultaneously?
So L'Oréal is a company that was born out of science over 115 years ago with a long-standing commitment to sustainability, a deep sense of responsibility. So when we think about sustainability, it's really embedded across our entire value chain, from sourcing to operational excellence to product design and research to how we bring products and solutions to market to better serve our customers and consumers. So to be able to do that, to mobilize an entire value chain, you need what I would call a team of teams. And my broad team of teams, and I give them a big shout out here, are the driving force behind how we drive sustainability every day in our business actions and decisions, in how we source our ingredients, in how we pursue operational excellence and efficiencies and newer solutions at our plants, in how we design our products informed by consumer insights and the latest technologies and solutions that are out there, and how we engage in markets and in business. So it's the team of teams that really, I would say, underpins our commitment to dual excellence, which is delivering superior financial performance coupled with that environmental and social impact as well. And that for us as a leader in the beauty industry, we not only feel that it's a responsibility, we actually see it as an opportunity. It's a way for us to really reimagine the future, to rethink what does beauty look like in the future? How do we continue to meet the needs of our consumers and communities worldwide and meet their everyday hygiene and beauty needs, right? So then it becomes this this nourishing, let's say, a way of thinking about how the changing world and the newer technologies and innovations out there can really nourish how you put products out there, and it really allows us to deliver that dual excellence.
Can you give us a concrete example where sustainability innovation has directly supported business growth or brand differentiation for L'Oréal?
Yeah. So in our sustainability efforts, our program called L'Oréal for the Future, we work across 4 pillars. So climate action, of course, nature, stewarding the nature, circularity, and communities. And let's take circularity, for example, as we're working on more circular business models, incorporating newer ingredients and packaging solutions, and really pursuing the next generation technologies that are out there. We've been also launching refill solutions to the market to lower the environmental profile of our products, but also offer that consumer a way to lower their impact and a better price point. And for us, we've learned a lot in that process, and it was through the drive of our teams again, the design teams, the operational teams that have adopted our plans to bring out these solutions that are out there so that we can support across many different categories and put new products out there in skincare and hair care and in fragrances, where if you refill more, you can save more as well. So in a way, you're not only tackling the environmental sustainability needs, but also you're offering that economic benefit to the consumer as well. And that not only creates that affordable option to the consumer, it helps improve brand loyalty. It helps recruit new consumers into the category because it gives a chance to the consumers to try and test and experience our products. And we really are learning a lot from this, and it's contributing to our growth. And we're investing heavily to see and, again, be informed by the consumer insights and the needs so that we can cascade it further around the world. Yeah.
Thank you. Sherry, I want to go back to 2 of the words that were mentioned earlier by Vaishali and also from Gilles, and they were responsibility and ambitions. And with that in mind, I wanted to ask you, the health check highlights a growing gap between sustainability leaders and laggards. What are the defining behaviors or decisions that consistently separate the two? Many companies are still framing sustainability as a reporting exercise.
Yeah, sad times. But actually, there are 3 very distinctive and clear levers that the leaders are pulling. The first is linking executive pay to sustainability progress. And this isn't just about targets, it's also about breaking those targets down. Because it may have been a leader before you that set those targets. But the responsibility is yours in order to be able to push that forward. And we're seeing that very clearly. In fact, in the top leadership category, 100% of those companies link their executive pay into the sustainability progress. The second interesting thing is that those companies, and I think that Ezgi just gave us a great example of that, they dig into their value chains. You know, their suppliers, they see as an extension of themselves. And the ability to be that buyer actually allows them the power of conversation, the power of challenge. You know, it doesn't always need to be a stick. But if you use a carrot and you're talking to your suppliers, you can actually create not only your own corporate health in terms of business and in terms of sustainability, but you can create an industry-wide opportunity to decarbonize. And we're seeing that very clearly. The third one is that targets are important. I think we talked about that in the panel. Transition plans are essential. So targets are important, but it's not enough anymore. You have to have that transition plan in order to be able to track how you are going year on year. And it doesn't need to be linear. It does need to be realistic. And so I think those are three things that we're really seeing clearly.
Thank you. Gilles, hello. Many companies have strong sustainability strategies on paper, as we've just been hearing. You know, where do you see the biggest disconnect between boardroom ambition and frontline? You know, what are they doing differently on an operational model level?
Yeah, so I think the biggest disconnect is not really at the level of ambition and the boardroom level ambition setting and strategy setting. It's more in the operationalization of the strategy, building plans, operational budgets, measurable KPIs, supplier requirements. So we are just at the start of this wave of sort of cascading those high-level strategies into operations, and clearly the 15% climate leaders in the more than 10,000 companies we have reviewed have implemented some of those best practices.
Thank you. Over to the other Gilles, actually. What is your approach in terms of performance and responsible investment?
No, it's becoming probably more important in the last 1 to 2 years, the issue of performance. Possibly as part of what you could call the generic backlash against ESG, and performance has been very often used as sort of Trojan horse to actually go against the very concept of responsible investment. I would make 2 points on that. One, we also need to take into account the investment horizon when we discuss performance, and that's definitely an issue. You can actually invest in segments of the economy which will provide you with very, very nice performance in the short run, only to hit a wall in 10 or 15 years, very simply because those activities are not going to become viable in a world which is warmer, or because regulations will have made their business model impossible. How do you take this into account in the measurement of performance, which often is a very short-termist measure of performance? So it's a general warning against this. But now we have also to take on board the fact that, yes, clients, savers want a decent performance for their savings. It's normal, and you're not going to win them by telling them, hey, you have to accept a loss. Actually, we check what we do for any sort of structural loss in performance due, for instance, to the exclusion policies that we would use to steer our investment. And I'm pleased to report that there is no structural performance loss attributable to this. But you have to accept that, yes, some years your exclusion policies may have a negative impact on performance. And very often it's because of completely idiosyncratic developments. One good example being that if you are reducing, underweighting your investment in fossil fuel, by definition, when oil prices go up, your performance is going to go down because you're underweight oil. And it's going to change the next year, and you have to accept this volatility. But over a period of, say, 5 years, I think it's still very, very hard to argue that the exclusion policies that are put in place right now, in a very general manner, especially in Europe, have had a negative impact on performance.
You mentioned 5 years there. Over the next 2 to 3, we'll make it a little bit easier with your crystal ball here. What economic trends do you really think will most reward companies that have embedded sustainability into their strategy, and I guess penalise those who haven't?
Well, there is an interesting debate right now, and there was a debate this week around carbon pricing, for instance. I know that it's a complex conversation, and then, yes, we've decided to postpone a little bit the implementation or the extension of the carbon trading system in Europe by 1 year, but it's going to happen. And this is the beginning of a very nice way and quantifiable way to directly link performance to carbon. We want to be able to analyze a company, a project, on the basis of its carbon content with a very simple and verifiable market price. And this is what carbon price allows. It gives you a clear, public, transparent benchmark to say this project is too carbon intensive to be financially viable because it will actually cost them. And this is going to change, I think, a lot of the way we deal with this sort of issues.
Thank you. Vaishali, CDP data consistently highlights governance. So we're going to move the conversation to this area now. They consistently highlight that as a defining factor of sustainability leaders. What specific governance structures or leadership behavior have you seen that make the biggest difference between ambition and actual delivery?
Sure, no, that's a great question. So just to tell you a little bit about our company, we're a renewable energy company. So we generate clean energy. So when we started this, some folks asked us that, do you really need to go down this path? I mean, we made a 5-year plan and a 10-year plan, and we socialized it and gave it a name, as all initiatives require to mobilize people. And so what we did was that we figured that it's really important for us. We had an ESG board level committee. Yeah. And then under that, we formed 3 distinct committees, one at the senior management level, one at the site level, because we are a very dispersed organization, and one was a group of climate champions. So they weren't folks who were in our function, but they were folks who were passionate about doing this for the company. And so that was a bit of a unique structure. I guess board and management is pretty standard, but we had this structure, and that really drove how we delivered, and that really drove how the organization got involved. So I think that's very important, because most often organizations get good scores, ratings, etc., and you go to a senior management person, they're not really clear about what happened, how did it happen. But now, in our company, we have our Apex committee members often asking us, oh, can you give us like a system where we can organize our data, because it's really better, it saves us time. Which means, to me, that's great, because it shows that they're engaged in what we're doing. Secondly, as Sherry, you mentioned, really getting everybody incentivized. Every single person, even the security guard in our sites. Can we get everybody incentivized? And we have a very defined plan every year. We define it across the organization, and I think that really accelerates the journey in the organization. And what it does is that and you should have a short-term plan and a long-term plan with your net zero goal. So we have SBTI validated 2040 goals, which is super helpful, because then we can break down our annual strategies. And as you mentioned, it doesn't have to be linear, but as long as you're doing things which your organization can sustain over a period of time, never matter what the outcome is. And if you do all of the above, I can guarantee you the outcomes are pretty damn good. So that is one. And then what it also does is that it helps with economic growth and profitability. We've been able to attract investors in our company from around the world, from Canada. We had Goldman Sachs as our first investor. We've had JERA from Japan. So people get interested. It's great for partnerships. In our solar manufacturing facility, we've just got a British investment agency investment. So, and they've all been fascinated by the work we do. With respect to our commitment to, build a sustainable organization systematically in a structured way. So I would say, and of course, it unlocks a lot of capital. So we are a capital-intensive company, and so we do have a lot of fundraise on the debt side as well. So we've raised about 3.5 billion of green bonds since inception, and that's a lot. And what we do on our commitment to sustainable organization really helps.
Thank you. Sherry, I'd like you to expand a little bit further on the governance and strategy topics that we're discussing here with Vaishali. What governance structures or accountability mechanisms most strongly correlated with real-world impact and performance?
Well, I do think that, doubling down on this idea that transition plans are front and center now. And it even requires governance. It's not just a one and done. It's about actually tracking and tracing how is it that transition plan is going to be implemented. And CDP has 21 different metrics that we look at to say if a company is tracking these 21, at the very least, they have the opportunity to actually be able to be transparent about those transition plans. If they aren't actually even tracking or tracing or measuring these different variables, how could they possibly know if actually you're tracking and tracing against where it is you want your transition plan to go? And so therefore, how is your target being achieved? And that is the interesting piece, because we hear in the press that companies are pulling back on their targets, that we're hearing about sort of that there's a softening of how much corporates are actually leaning into this. But the reality is that we're not seeing that at CDP. We're seeing that data is continuing to flow, that we're actually still maintaining the fact that companies from all around the world are looking at how those data sets are being used because they have this tracking and tracing against their transition plans. They may not be doing it as publicly as they did last year or the year before, but going back to the governance is becoming an embedded part of how you do business. And I'd like to also pick up on another point which we haven't talked too much about, but I think is really exciting, and we're hearing a lot about here at Davos, which is water. And understanding that water is part of nature, part of biodiversity. CDP has been collecting information on water and water governance for 12 years. That was way before it was fashionable, before it was interesting, before anyone would pay for it. Now, we're getting a huge amount of demand for the water data. Why? It's because if the governance isn't there, if the tracking and understanding of how you are being efficient about such a scarce resource isn't part of your management and governance lexicon, you're actually setting yourself up for a problem when scarcity starts hitting. And we're talking about demand overpacing supply by 57% by 2030 for fresh water. So again, this is not decades forward. And actually the thing that gives me comfort is that we are talking a lot about it, not only here at Davos, but also across the world, and I mean the entire world, including the Americas, because water is an economic input. And the governance of your economic inputs mean that you can actually more predictably price what that's going to be. That price is an absolute cause and effect for what it is your profitability might be next year and the year after. So getting it right is all about economics. And that piece, you really need the governance.
Do you think that's where global leaders should be putting their focus first then? I mean, climate, nature, water, all the value chains, if they want to maximize this resilience and have that competitive advantage, what's the priority?
So I think that it's very linked. So it's difficult to say which priority. And materiality, depending on which business you're in, gives you an indication of where it is that you might want to go there. However, I do think that with water, it's a non-woke topic. Because if we think about AI, yes, I said it first around the table, and no panel at Davos is complete until someone says AI. But when you think about it in this context, actually AI can be synonymous with thinking about growth. It gets countries excited. It gets companies excited about growth. But that is going to take an increase in your data centers, which is going to need an increase in the amount of energy and water. So again, part of this is linking the things that CDP has been surfacing for 25 years. This is our 25th anniversary, so we got a lot of data. And now it's really becoming really linked to the growth agenda. And that actually might be the lens that you can prioritize.
Eske, I think you have something to add on to this. I could see you nodding in agreement with a lot of those statements.
I mean, we discussed mitigation and now we're getting into adaptation and resilience, right? And I think over the years, as companies have been on this sustainability journey, and as we're asking ourselves the tougher questions and building deeper understanding of the real world challenges that we're looking to solve, we are finding ourselves that this is not just a reporting or compliance exercise. The data is telling us something. It is telling us, it is showing us where the far-reaching impacts of climate change are, where we need to work upstream in our sourcing regions, where we need to understand the needs of the consumer in the household, what that looks like. For us, our industry, the hair salons, what will the hair salons need in the future? How do we help build resilience for them? So water is a significant topic, especially as you think of our rinse-off products, right? Where you need the water in the use phase. You know, what does the shampoo of the future look like? How can we make it no rinse, fast rinse? How can we really continue to think of the consumers and the communities around the world in those water stress areas across, you know, from Mexico to Brazil to South Africa to Europe to India? I think these are the deep questions and challenges we're asking ourselves, and our R&I teams, they're doing incredible work because, you know, they are the experts of their métiers. They've got deep know-how and knowledge into the beauty industry. They've got so much data and science, and now we're coupling it with the environmental science, the climate science that's evolving, that's out there, that's teaching us something, that's showing us the path forward. So for us, it really, the resilience and adaptation component becomes a way of thinking about the future of beauty and how it becomes more sustainable, inclusive, and personalized. Yeah.
So for you then, what is the single most important mindset shift that leaders need to make to turn sustainability into a lasting competitive advantage?
Yeah, I mean, I think it was mentioned earlier, but I would say curiosity and the pioneering spirit, right? To be able to ask those questions, the operationalization that I think Jill mentioned, right? How we pull the thread, ask the questions, challenge each other internally, because there's so much we can all learn from each other across different teams, but also invite others from outside to come in and inform our decisions and show us their best practices, their benchmarks, their newest technologies. And we can do that in a number of ways. We can do that with our existing supply chain partners, and we do that very often, and we have huge open innovation efforts. But we can also do that by inviting new partners to the table, by being more intentional, more inclusive about who you turn to look for the solutions where you may not have an answer for, right? How do you close those critical solution gaps? And for that, we're proud to have launched last year our l'Accélérateur program, which is our Sustainable Innovation Accelerator program that invites startups and ventures into the company for us to test and pilot new solutions with them, but also accompany them on this journey of scale up. Because I think often we talk about the innovations and the solutions and when there's a gap, and then we can go find the solutions, but bringing them to scale, really operationalizing them, is really where we need to handhold more.
Thank you. Gilles, one of the topics we've not touched on yet is finance and the financial implications. And obviously with cost pressures very high still into 2026, how can companies fund sustainability transformation while maintaining financial discipline?
So I think it's a great question, and of course across industries, most of the companies are looking at their cost and their productivity. But coming back to the core success factors of making sustainability a core part of the strategic plan, and not on the sideline, as a result, investments are going to be in the pipeline of the core strategy for the enterprise. So focus on the highest return, nearest term investment first, such as energy efficiency improvements or supply chain optimization. But don't forget the revenue opportunities. We found that in the climate leaders sample, they actually developed $218 billion of growth opportunities as well. It takes a bit more time because you need to recast your value proposition, redesign your offerings, but that's how you create long-term value for the shareholder.
Thank you. I have a final question that I'd like to ask to all of you. We'll start with you, Vaishali, and we'll work all the way down. If you could leave Davos leaders with one strategic takeaway from the CDP Corporate Health Check 2026 and the knowledge that you're bringing to the table here, what should they be doing differently on Monday?
So I guess we're in Davos, and we've heard a lot of the global leaders, and geopolitics is driving business. There was a time where business was being driven by geopolitics. So it's a very, very challenging world, and companies and people in companies are uncertain about the future of sustainability, the future of all things climate. And I'd like to go back and say, and based on what you talked about, AI is the buzzword in Davos, and the core of AI is actually the use of clean energy and water as well. And so there is much to be done. And rather than, as I said, showing pathways to, the reporting and scores and all of that, I think it's really important for us to see the bigger picture, that, all of what we are doing is, after all, for the transition. Definitely in India, we're trying to move from coal to clean. And I think India's shown really super ambition and execution with respect to delivery on the ground. So just stay optimistic, hopeful. There's a larger purpose of ensuring that how we do business is important, so that we can leave the planet, in a better state for the next generation. I do feel these are very high-level thoughts, but at Renew, they drive a lot of people. Especially in India, you can actually see the consequences of climate change firsthand. So they seem way more real there. So that's what drives a lot of our folks on the sites when they go to work. So stay at it.
Good advice. Gilles Moek.
Yes, I think the main message would be, I think we can be successful because we are not going to take this, and we're not taking it as a chore, but as a business opportunity, and also as a source of pride for the people working in our companies. Business opportunity, we'll take one example. We've created a spin-off, AXA Climate, whose job actually is to work with some of our clients and corporates to actually help them through their own transition, offering solutions, offering technical solutions. It's quite often quite sophisticated. We've hired lots of very young and enthusiastic people to do that, and it's a growth opportunity. And second, on pride. In the field of adaptation, we've developed a lot of parametric insurance, which is one of the ways to better protect people, especially in emerging countries, to deal with extreme weather events in a way that is much more fluid than the traditional insurance would do. That's a source of pride for the people working in a company with the feeling that, hey, at the end of the day, you've made a difference.
Thank you. Sherry, I'm going to come back to you because I think you should have the last word on this one. Ezgi, over to you.
I think maybe one final thought would be why you do what you do matters. And I think profoundly understanding what you're solving for and asking the questions from the ground up, right? Really looking into your consumers, your communities. What are you solving for? What challenges are there on the ground? How can you continue to provide the products and services that improve the quality of life, that improve livelihoods? I think that's the piece that we should all keep in mind, and why we do what we do matters.
Thank you. Gilles.
Sustainability is not only disclosure, it's part of the core strategy for long-term value creation. There are climate leaders who show the path forward and learn from those who are already successfully developing sustainability strategy and creating value.
Thank you. Sherry.
Oh, a lot of pressure to come last after this incredible panel. I'd say that actually sustainability is core to your financial performance. And that really hits the nail on the head because we often talk about risk, physical risk, environmental risk. But that's the tale of only one half. The other half is the opportunity, and understanding how it is that you balance those two and make the investments today to be sustainable tomorrow. That is a financial story. That is not an environmental story.
I'd like to thank Sherry and the whole CDP team who've had a marvellous effort to make this happen today. All of our panellists, thank you for being with us. Those of you who are tuning in live online, and of course you, our audience here. The conversation has just started just because we're leaving this room. Keep it going, and I hope you enjoy the rest of your time in Davos. Thanks for being here on Euronews at our Davos hub. Thank you. Photograph if we stand at the front end, ladies and gentlemen. And does anyone want to say?
Thank you.